Hey, what's up, investors? Welcome back to Alpha ETF, the channel where we review exchange-traded funds and help you make smart investment decisions. I'm your host, and today we're going to take a look at a very interesting ETF that tracks the performance of smaller US companies. It's called the SPDR Russell 2000, a small-cap UCITS ETF, or just the ETF for short. This ETF has the ISIN EAOOBJ38QD84 and the WKNA1XFN1. It's issued by State Street Global Advisors and it follows the Russell 2000 index as closely as possible. Sounds cool, right? But is it worth investing in? Let's find out. Before we dive into the details, make sure you hit that like button and subscribe to our channel for more awesome ETF reviews. Also, leave a comment below and let us know what you think of this ETF or any other ETF you want us to review next. We love hearing from you. Alright, let's get started. We're going to evaluate this ETF based on 5 criteria: total expense ratio, fund volume, volatility, sector/country/theme exposure, and performance. For each criterion, we'll give it a score from 0 to 10, where 10 is the best and 0 is the worst. Then we'll add up the scores and divide by 5 to get the final score for this ETF. Ready? Let's go. First up, total expense ratio. This is how much it costs you to invest in this ETF every year. It includes things like management fees, administrative costs, and other expenses. The lower the expense ratio, the better for you as an investor. The expense ratio of this ETF is 0.30%, which is pretty low compared to other ETFs that track small-cap US stocks. That means you only pay €3 for every €1,000 you invest in this ETF per year. That's not bad at all. We'll give this ETF a score of 9 out of 10 for total expense ratio. Next up, fund volume. This is how much money is invested in this ETF by all investors. The higher the fund volume, the more liquid and stable the ETF is. It also means that the ETF can track its index more accurately and efficiently. The fund volume of this ETF is around €1.3 billion, which is quite impressive for a small-cap US stock ETF. That means there are a lot of investors who trust this ETF and believe in its potential. We'll give this ETF a score of 8 out of 10 for fund volume. Moving on to volatility. This is how much the price of this ETF fluctuates over time. The higher the volatility, the more risky and unpredictable the ETF is. It also means that you can expect higher returns or losses depending on how the market moves. The volatility of this ETF is around 26%, which is quite high compared to other ETFs that track large-cap US stocks or global stocks. That means this ETF can be very exciting or very scary depending on your risk appetite and time horizon. If you like roller coasters, you'll love this ETF. But if you prefer smooth rides, you might want to look elsewhere. We'll give this ETF a score of 5 out of 10 for volatility. Next up, sector/country/theme exposure. This is how diversified this ETF is across different industries, regions, and themes. The more diversified the ETF is, the more resilient and balanced it is against market shocks and trends. The sector/country/theme exposure of this ETF is pretty good for a small-cap US stock ETF. It covers a wide range of sectors such as consumer discretionary, healthcare, industrials, technology, financials, and more. It also focuses on companies that are based in the US, which is one of the most dynamic and innovative markets in the world. However, it doesn't have much exposure to other regions or themes such as emerging markets, sustainability, or digitalization. We'll give this ETF a score of 7 out of 10 for sector/country/theme exposure. Finally, performance. This is how well this ETF has performed over time compared to its index and its peers. The better the performance, the more money you make as an investor. The performance of this ETF has been mixed over the past year. It has lost about 13% of its value since last year. That's not very impressive, especially considering that the ETF has also underperformed its peers such as the S&P 500 or the Nasdaq 100, which have done better over the same period. However, if we look at the longer term, the ETF has done much better. It has gained around 55% over the past 3 years and about 23% over the past 5 years. That's pretty good for a small-cap US stock ETF. Of course, past performance is not a guarantee of future results, but it does show that this ETF has some potential to deliver strong returns over time. We'll give this ETF a score of 6 out of 10 for performance. Alright, now that we've evaluated this ETF based on our 5 criteria, let's calculate the final score. We'll add up the scores for each criterion and divide by 5 to get the average. So, we have 9 plus 8 plus 5 plus 7 plus 6 equals 35. Then we divide by 5 and we get 7. That's our final score for this ETF, 7 out of 10. Not bad, but not great either. This ETF is a decent option for investors who want to invest in smaller US companies and are willing to take some risk and volatility. However, it's not a very exciting or innovative ETF and it doesn't offer much diversification or exposure to other regions or themes. It's also not very cheap or efficient compared to other ETFs that track similar indexes. So, what do you think of this ETF? Do you agree with our score? Would you invest in it or not? Let us know in the comments below and share your thoughts and opinions with us and other investors. We'd love to hear from you. That's it for today's video. Thank you so much for watching and supporting our channel. If you enjoyed this video, please hit that like button and subscribe to our channel for more awesome ETF reviews. Stay tuned for our next video where we'll review another interesting ETF that you don't want to miss. Until then, happy investing.